Okay, welcome everyone. I'm going to go through these stock charts. I see some really big moves that are potentially going to happen here in the future. And unfortunately, I think they're going to be to the downside. That's what the chart tells me. Doesn't mean it's going to play out. But as of right now, that's what the chart's telling me. So I got to just follow the charts. That's really the name of the game when it comes to my trading style and everything is I just follow the charts. Whether, I don't listen to the news and I don't really react to, don't fight the Fed or just kind of general statements that people make. I follow the charts. And so let's start off today with volatility. I haven't covered that one for a little while. So let's look at this UVXY and we'll also look at VXX. Here's the thing that I'm noticing that really stands off the chart kind of right off the bat. Let me tighten this PPO just a little bit. So we've been really basing out and holding support on this thing right around 1035. Dipped down it twice, twice actually. Look, once there and once today we were below it, but they recovered that. So when it opened lower and they bought it up. So volatility continues to find some support right in this area. The other thing that stands out to me is the fact that, let me go ahead and get rid of this trend line right here. We don't need that one anymore. The other thing that really stands out to me is the fact that we have bullish divergence on the daily chart. Clean and clear bullish divergence. You can see that basically the momentum has continued to move higher. And so kind of behind the scenes, there's some buying going on behind the scenes, and it just hasn't had that catalyst where price is broken out yet. But you do have that bullish divergence in volatility. This is not something that you normally would see if the market's expected to go a whole lot higher without some sort of a pullback. So to me, it looks like people are protecting their portfolios or getting positioned to profit on a downside move. The last time we saw bullish divergence really in the volatility index that was this large especially was really back here. You can see right there we started to put in bullish divergence, and you can see it takes time sometimes to really play out. The divergence really started to show up about right here, and then it extended for a little bit while longer. So really and that was a period of about 67 days, roughly. So it extended for that period of time. But once we hit that support, which was the previous support level as well, right around $10.30, we bounced above it, but it never really went much lower. So to me, this looks like a good area to start to build volatility long positions, looking for the next volatility event. And again, this can extend for some time. We don't know when the event or catalyst is going to be, but this is, to me, looks like an opportunity to start to build a long position to position for, a big spike in volatility. Is it going to be as big as this spike? I don't think so. This was a really huge spike on the COVID drop in volatility. I'm not expecting it to be that large. But when everyone's for the most part net long and net bullish, I know that because that's showing up in the put call ratio. It's showing up in the bull bear sentiment indicators. It's pretty much showing up across the board. Everyone's net long because the market's been strong. It's been going higher, so everyone's been making profit. They don't see a reason to get out of those trades. So everyone, I think, is net long for the most part. Just a few lone bears sitting on the side right now. But when that trade unwinds, when everyone realizes that, there is still risk in the market, you see that huge spike in volatility as everyone rushes for the exits all at once. The door to get out of this trade is small. Not everyone's going to get out. And that's when you see the massive spike. So what I look for is risk reward. And from my perspective, the reward to for volatility spike going up and being long volatility down here is pretty favorable. I think you've got, the risk to the downside is always there, but I think the reward to the upside is much greater. So a favorable position and a favorable favorable price allocation. So I'm starting to build a long position. I do it over time. It takes, I don't buy it all at once. I kind of add to it as time extends. And as long as the trade and the technicals are still still holding up, as long as we still have bullish divergence and we're holding some support, then I add to it. When this explodes higher, or if it explodes higher, look for these levels that were, basically support and resistance on the way up to act as the same. So I see this level. We're going to go ahead and take these ones out. I think we're going to probably move a lot higher than, we got that one right there. So I think the first level of major resistance will be about this 2350. And that's a, almost a double from right here where, we could move up. Yeah, it's about 130%. So I see that, and then we've got another level at 2960 and another level here at 46. It's about 47. So we'll just keep an eye on that if and when we get some sort of volatility event. What could cause that volatility event? Well, the Fed just came out today and has talked about the fact that they want to keep interest rates low forever, basically, which they're not going to raise interest rates. I mean, they've stated it clearly that they're not going to. And the reason why they're not going to raise interest rates is they don't have the ability to raise interest rates. There's too much debt. So they're going to try to inflate is what likely they're going to try to do. But does the bond market play nice? That's really the key. Because if the bond market plays nice and allows them to inflate, then all's good, But if the bond market says, no, I'm not going to just take the loss and I'm going to be selling my bonds, then the Fed is going to be in a tight spot. And so it's important to watch the bond market. Up here on the chart, TLT, we saw another sell-off today. And so watch for this. What I was pointing out earlier in this was we didn't have negative or bullish divergence in the bonds on the daily chart. So let me just go ahead and get rid of this breakout line here. The point that I'm trying to make is we have bullish divergence on the hourly right here. It's still intact. So it's signaling that bonds are likely to, bounce here. We did see a bounce though, just the last few days. So that might be it for this hourly divergence. On the daily chart, the more significant daily chart, no bullish divergence. You basically have momentum moving up right here and price moved up. Now price is starting to sell off. So what I'm thinking is maybe we sell off, maybe the bonds sell off down to this 148.12 area, possibly undercut this area just a little bit. That should probably spike, that should spike interest rates to the point where I think it's going to spook the market, and especially if it does it quickly. So if we see bonds sell off all the way down here, and if it does it soon, then we'll likely put in that bullish divergence. It'll look something like this, where we'll start to have that bullish divergence as we drift lower in price. Then look at that moment in time, we're going to want to watch the markets to see if they're going to sell off. And if they start to sell off, you'll see that money rush back into the bonds. The bullish divergence that's in play, or that will be in play potentially, will start to catch a bid, and then bonds will start to move higher. Where do bonds go? Well, I think they can get all the way back up here to this 172. And that's not a bad trade really from where we're at. Let's say we undercut those lows up there at about a 15% gain in bonds. Not a bad trade really. So I'll be watching for that. There's really is some potential there. But again, we got to see things kind of firm up. First, we got to see bonds sell off. Then we want to see the market sell off. There's a lot of hypotheticals in what I'm talking about here. So we're just going to continue to watch the charts. On the hourly though, you can see we sold off today, another down day. And so I'm looking for more selling in the bond market. More selling in the bond market means interest rates are rising. And if they rise too quickly on an economy and on a market that is up here due to multiple expansion, Rising interest rates is multiple contraction, which should bring the market down. And again, just because the Fed says they're not going to raise interest rates, they don't control the long end of the bond curve nearly as much as the short end. All right, so they're manipulating the T-bills basically, the 4 week, the 6 month, the really short end of the curve is where all the Fed's energy and money buying is going. They're not really controlling the long end of the curve out here. So this is more free market. This is more free market. Now, obviously, the Fed could, announce they're going to buy the long end of the curve too and do yield curve control. That's basically what a lot of people are talking about. We haven't heard it yet. So again, we're going to watch the bond market to tell us what's potentially going to happen. Okay, so gold. What does that mean for gold? Well, again, gold, we'll watch the chart. And here's what the chart's telling me as of right now. As of right now, we've got this downtrend line that's been in play really since August. Gold, broke down and hit major support. So major support as of right now is sitting around 1790. We've hit that once already. If we hit it again, we could go lower, and I see the next line of support on gold really down around this 1700 to 1750 area. I think anywhere in that area to me looks like a buy opportunity, and that's likely how I will be playing that. Going back to here, though, in the short term, we came down and then we broke out of that downtrend. Let me show you. Sorry, I'm just trying to... There's the downtrend. We broke out right here. Pretty impulsive breakout, but an equally impulsive back test. And we're just consolidating around support. That's basically what this is. So we're above support. We're consolidating. I don't know which way this is going to break. I think a lot of which way this is going to break is going to depend on the bond market and the dollar. So let's look at the dollar. The dollar has broken out of a downtrend. So this was the downtrend right here in the dollar. And the larger downtrend, if you go to the daily, really started when the Fed came out with their crazy policy. This is what the Fed has been doing is trying to have the dollar go down, and they have succeeded in that, and that's pumped markets higher. However, the downtrend right now, if you go to the hourly chart, you can see here this was a nice, clean, sustained downtrend, and there was a breakout. So here's a breakout. Consolidate a little bit and break higher. Come back down to the first level of support, which is about this $90 area, and held. So far, we've held above this support area. If the dollar continues to move higher, which is what I'm expecting it to do, it doesn't mean it will, but that's what it looks like it wants to do, and we start to break up above these high areas, the market's going to see that. The market will realize the dollar's moving higher, and stocks should sell off because of that. And gold, I think, will likely sell off as just a knee-jerk reaction as well. So that is what I'm expecting to happen. Doesn't have to, but that's what it looks like it wants to do. Again, I need to see the dollar move higher to confirm that. One way that I'm playing it, so I have a starting short position in triple Qs. I'm not going to go full. I'm not going to load up completely short in that indice until I see some more confirmation. But if I get that confirmation, what's going to happen likely is when the market gets the confirmation, everyone realizes it all at once, and you get that huge move. So I'm stepping in a little early on that, with the risk of being wrong. Basically, a higher risk trade on a starting short position. But the reward to me is favorable, because if I'm right, by the time the market realizes it, I'll be well into the profit when I'm adding to my short position. And so that's how I'm trading that one. Some of these gold miners, I'm just not so sure of as of right now. So I'm going to just skip these. I don't know which way they're going to go. They could go lower. They obviously could hold here as well. I don't have an opinion right now. If they go lower, I'm looking to be a buyer at lower prices because of what I just showed you guys in gold. Oh, and also going back to gold bullion, the other thing to note, no bullish divergence. And that's one of the things that really gives me pause for a longer term swing trade. I want to see that bullish divergence show up. So in order to get that, we need to see a lower low in price. We need to undercut this 1776 area, 1770 area, make a new lower, marginal new low somewhere down in here, 1750 or so, and then have a higher momentum. So it'll look some. That's why I got this line drawn out, because I think if we sell off, we're likely to see that bullish divergence start to show up. That's why I want to be a buyer down there. But as of right now, I'm not so sure. I think we could have lower prices. The miners will likely sell off with that. Okay, the financials hit a new all-time high today. You can see here, previous high was about this level at 31.45, and we closed pretty much closing right at it. But intraday, we did hit an all-time new high. I think it's likely that these financials aren't going to go too much higher. But again, that comes with the fact that I think the markets are going to start to sell off. What's happening is the interest rates have been rising, and then so the financials are catching a bid. But because that's basically, they can borrow on the short end of the curve for cheap and lend on the long end for more expensive, with higher interest rates on the long end. That's basically what that trade is all about. But the other thing is, if you look at some of the economic data that came out with the jobs and whatnot, the jobs are employment's starting to roll over, and we're starting to see more job losses pick up. So you're not borrowing money if you're not, if you're losing your job, and if you think you're going to lose your job, you're not borrowing money either. So whether the banks can earn more money on a loan might be irrelevant if people aren't taking those loans. So just something to look at. Mortgages are going to be more expensive, etc. My position is in Citi. I'm short Citi. Obviously, it's been a pretty painful trade recently. I think I'm down. Let's see. I took the trade, I think, right about here, and I'm down about 12% on the trade. So obviously painful. And what I'm looking for right now is I don't want to see too much higher price action. I've got this blue line about 70. It's about 70.50 or so as my stop. I'll likely stop out up around there on a daily close, not an intraday, but a daily close. So daily close above 750, I'm looking to stop out and look for, to fight another day. Don't win every battle, don't win every trade. Stop out on the ones that aren't working. But as of right now, we're still within my acceptable trade parameters. We have negative divergence still intact. We need to see this thing turn down soon in order to confirm this negative divergence. Otherwise, if we keep going higher, we're going to burn through the negative divergence. Still there, and also we've just barely chopped above this kind of area that I'm looking at. So we're still in the area where I think it's likely to reject. If it doesn't, we stop out. So that's kind of how I'm trading that one. Here's the trade desk. I pointed this out in the subscriber picks video yesterday. I took a short on it yesterday, actually, when I noticed that this chart was kind of the trade setup that I like. So took a short on it. Today it's down 1%. Not much, but about 1%, a little over 1%. Here's what I like. I continue to like about this bearish rising wedge right here on this daily chart. Big bearish rising wedge. Broke to the upside. We've been seeing this a lot lately on these bearish patterns, the algos or whatever it is. They like breaking. They like breaking these bearish patterns bullish, basically. And that just seems to be kind of the status quo recently, is break, when you have a bearish pattern, break it to the upside to completely throw anybody off who's looking at the chart pattern, and then break down after that. And that's what this looks like. So you got the breakout to the upside, and then you've got the breakdown. So that is a breakdown right there, pretty impulsive. And we broke the lower support. So there's your lower support coming off the March lows right there. Did a back test and, starting to roll over. So look for continued weakness. Obviously, we can continue to do back tests. That's always a possibility. But this, to me, looks like it's going to roll over relatively soon. And if you look at the daily, you can see that we basically had negative divergence on the daily right there. clean, clear negative divergence. So divergent high right here. And all of this price action up here was a divergent high. And it's now since failed. We're starting to come down. So I think a likely near-term target is right down here at this gap fill, about 664.63. That is how much farther? It's about 14%. I think that's a high probability target is about a 14 to 15% drop from here. And then, we're likely to get a bounce there. We'll take a quick look at Tesla here. Tesla, over the last couple days, have just really kind of gone sideways. You can see here, they ripped it up, they broke it down, they popped it back up, and now they're just sideways. So kind of a battleground right now going on in Tesla. I don't know which way it's going to break. Obviously, it could break higher, could break lower. I think a breakdown in this thing, which I do think is coming. I'm short Tesla. Just got short just recently. And I think a breakdown in this thing will likely be an impulsive breakdown, probably going to come in the form of a big gap down. And that is something that we'll have to continue to watch. But right now, you've got this break. Here's the break of trend right now. Here's your March lows, and here's your trend. We broke it, but it wasn't impulsive. Someone's commented that, I pointed out that we broke trend right here and we had negative divergence, which is true. We did have negative, let's look actually. Yeah, we had negative divergence when we broke the trend, but it wasn't an impulsive break. I always look for impulsive breaks. So you want to see a big red breakdown candle. And if you don't have that, then it's often telling you that there's likely going to be a back test. And so that is what we saw. This huge ramp up is a back test. We haven't even fully back tested the trend line. So that's why I don't know. Maybe we break higher and do that back test before failing. I really don't know. But, we are up near resistance. So I think for this one, it just is a matter of when this is going to break down. And until then, we don't know. But the other thing is, it's going to be really hard to short this thing when you get a really firm sell signal, because it's likely going to break down quite a bit. It might be down 30% on, it might gap down 30%. Do you want to short something after when it's opening up down 30%? I don't know about that, So I think for me, I'm stepping in a little bit early and just going to kind of ride it out a little bit. Again, not a large position. Let's look at Etsy. So this one was interesting today. I think it was up quite a bit at one point in time. I added to a short position that I have in this. And here's what we have going on in this thing. We had this trend line right here. This is a daily chart. Here's your trend line. It broke right there. You had the breakdown and you sold off a little, but then did a back test. After the back test, you had a little bit more of a breakdown from that back test. And it might not look like a lot, but if you took a short position, which this would be an objective area to short, it would be a back test right there. If you took that short position, the thing fell 24% from that. Then we created a secondary uptrend line right there. We broke and did a back test. Actually, you can see 2 days we back tested. Today they back tested it, but to me that looks like a reversal candle, like a doji right there, reversal candle. So I'm looking for more selling tomorrow, looking for a confirmation, basically selling. So watch this. It might open. Maybe they'll make it look like it's going to go higher, but I think this is likely to sell off tomorrow. Doesn't mean it has to, so you have to obviously look for it. On the daily chart, so we're back testing resistance. We put in a reversal candlestick. We need a confirming candle to help confirm that reversal. We have negative divergence on the RSI, and we have it also on the PPO. So in general, you have everything you need for the technicals to set up. Now we just need to see price start to confirm. Okay, Peloton here looks kind of like the same deal. All right, let me show you the trade. Here's your uptrend line coming off the March lows. This thing's just been on fire. Broke trend right there. There's your breakdown of trend line support, but there was no negative divergence at that time. So you didn't have everything I was looking for. Negative divergence showed up when we got this full back test of the trend line. So this is where I got short right here on December 22nd. Down on this one about 3.5% because it's, you know, it sold off and did a little bit of a, you know, it's kind of chopping around a little bit. Obviously, we can backtest again, or we can break down. We still have negative divergence on the daily right there. We have it on the PPO as well right there. So clean negative divergence, broken trendline support right there, and have already done a successful backtest and failure. All right, that it wasn't able to recover that trend line. It was rejected. So I think we're gonna, you know, we're gonna wake up and this thing's gonna be down pretty soon. The other thing, you know, yeah, we got a little bit of a doji candle. It's not that much of a doji, so I don't know if that's gonna be qualify as a doji, but that's what I'm looking for on this one. I'm looking for much lower prices. I think we head down to about 118. And ultimately about 80 bucks, I think, is where this thing's heading. Nike looks like it wants to break bearish. Here's what I got on Nike. Uptrend line coming off the March lows. Reaction there, and yeah, we didn't really get a reaction there. I might be able to tighten that up. Maybe something like that. About right there. There we go. So we've got a reaction here, and a third reaction right there. It also created this bearish rising wedge pattern. So bearish pattern broke to the upside right there on earnings. This was the day they came out with earnings. Everything looked great and rosy. Day of earnings. You know, if you bought, they beat on their earnings, and yet the stock's, you know, slightly lower than it was on earnings. So broke down, backtested, broke out again, and is failing. So this is, to me, this looks like it's kind of run its course in this bearish pattern. It's ready to break down to the downside. So I'm watching this one. Also, big negative divergence in play. A lot of stocks right now have negative divergence. It's just, it's the nature of a really extended market. You're going to start to show up. It's telling you that we're about to get a big, you know, some sort of a rollover event, and it's just a matter of when. You know, the music's playing. Nobody wants to get out of their longs. They think higher, you know, they continue to ride the trend up, even though the music is starting to slow and potentially going to stop any minute. You know, you don't know when. You know, it could stop tomorrow, could stop in a month. Nobody knows. That's why when I start to see these kinds of patterns, I don't like to either stay in longs, or I don't like to enter new longs or add new money to longs when these patterns start to show up. When these patterns aren't there, then the trend is, you know, can be your friend and you can continue to ride it up. But when these patterns start to show up, it tells you that be on the lookout because you're about to see a reversal. So what I'm looking for is a sell signal or a break of this trend. We might bounce tomorrow, we might break, nobody knows, but that's what I'm looking for on this one. Here's run. This one looks like it looks to me like it's about topped out. You could see some more topping action where, you know, they spike it up, it sells off, they spike it up. That's kind of topping action. We could see some more of that, but here's what we got. Big trend line coming off the March lows, rocketed up. We broke trend right there. We did have negative divergence. It was basically right here. And I did catch this short all the way down to here to this support line. Broke trend, and then we've been doing a series of back tests. So you can see one back test, it's kind of a second, this is kind of a third. The sellers are stepping in early, basically, and shorting this thing when it gets close to resistance. So that negative divergence is still there on the PPO as well, and on the RSI. We're pointed down, starting to turn down on the PPO. You can see we're starting to turn down right there. Yeah, so again, obviously we could spike up and do some back testing action. I think it looks like a good opportunity to add or take a short position at trendline resistance if you can get a tag of that. That would be the objective area. When this thing's all said and done, I think it's very likely we come down to this 2350 area. That would probably be a longer term target for this thing. Snap had a pretty good sized down day today. Again, when you have negative divergence, which we've had for quite a while, in this entire pattern right here, we've had negative divergence, then divergent highs are likely to fail. And that's exactly what we had right here. You can see we just inched up and made a new marginal high above the previous high, and then we failed. Big impulsive, really 2 days of selling. In the last 2 days, from the high down to the low, this thing's down 15%. So divergent highs are oftentimes a point of failure. And that's what we've seen. Now we do have this pattern. We've still held support. It's right there. We haven't seen that break of pattern yet. So what I'm looking for is a sell signal, which would be a break of this trend line support. We get that, and if it's impulsive, we look for a gap fill down here at 29.24. That's the trade idea. That's a nice clean trade idea right there. You don't have an entry or a trigger yet. Need to see that, and there's your gap fill. So very obvious pattern. I think if we start to sell off, they step in early. I don't think we're likely not to fill the gap. We'll probably, they'll probably step in early. So I'd be looking at that because it's a really obvious gap. Everybody's going to be watching that gap. Here's oil sector XLE. Now we're just trading up around this. See this breakdown reversal. It's an island cluster reversal top right here. That signals a top. We're doing a back test of that and chopping into that cluster. We shouldn't really go above it. We should not close above it on a daily close. And I think it's likely we get rejected at what I have marked out at this trend line right here, about 44.76. So again, today popped above it, failed. So they're going to probably test us a little bit, but I think we're likely to fail here. To me, this looks like a pretty objective area to actually be short, depending on if we turn down. If we turn down soon, we'll start to confirm a negative divergence. We don't have negative divergence. Well, no, we do. We did have negative divergence right here. There, we had it right there, and it's just extended. So if we turn down soon, that's going to confirm this negative divergence. I think we're likely seeing kind of the top of this energy rally. And then from there, we'll have to see. I think we'll probably pull back to 34.25, and at that point, I don't know. And I'm going to wrap up with the FANG stocks. They saw weakness across the board. So let's see if we see this rotation. What we've been seeing is that when the FANGs are weak, the other stocks are strong, and then the other stocks sell off, and then the FANGs are strong, and people are kind of jumping back and forth. So let's see if we see that. But today they were obviously weak. Apple is starting to break down. We've had a few days where it's below trend. So here is the trend in Apple coming off the March 2020 lows. And we've got an uptrend where we had a reaction here, reaction there. We held support all through here. And then recently we have broken down and what's looking like we're struggling, below trend line support. Let's go into the hourly here. You can see here, we broke down, did a back test, and rolled over. So we're looking for more selling. I think undercutting the lows right here, which are right about, they're right about there, 126.30. You undercut those lows, and you're likely, and as long as you get, you want to see an impulsive breakdown below those lows and a close, an hourly close, then I think that's going to get the party started to the downside. Looking at the daily on Apple, negative divergence is right there. It just showed up. So this price action right here was a divergent high, which is a high probability of failing. So far, it has failed, and we'll look for continued downward price action. So looking weak to me in the short term, and this has the potential for a good, a trend to the downside. And if Apple's selling off, the market's not going to stay up with it. Not with the market cap weighting that Apple has across the board in the indices. Apple's very heavily weighted. Apple and Microsoft make up a huge percentage of the S&P 500. If those two are selling off, they're going to drag. Then the index starts selling off because those two stocks are selling off. The index has to sell all the stocks. The passive investors have to sell all the stocks within the index. So it kind of catches, it builds on itself, and other stocks get sold regardless of anything because they're indexed. And that is that is some of the downfalls of passive investing. When everything's going up, it lifts all ships, but when everything's going down, even the good stuff gets thrown out and sold even with the bad. The bad gets sold with the good. They get sold together. Microsoft again has gone nowhere since July All right, so this is just dead money. You can see it's just, this to me, this looks like a top. It's either a consolidation building for the next large major trend to the upside, or it's a top. And, you know, you can see we're kind of spiking it, selling off, spiked it again, sold off, spiked it again, sold off, drifted up, selling off. It's just going sideways. So I'd like to see a break of the lower trend, lower support line about 200. That should get this party started to the downside. We break 200, I think it's very likely we're going down to about 170. Same with Amazon, sideways, looks like a complex head and shoulders pattern. This just continues. So we're looking for a break of the neckline at about 29.30. And until we see that break, then there's just no trade right now. It's just kind of dead money. And Google is, you know, setting up in this bearish rising wedge pattern. Looks like it's going to break to the downside because it's a bearish pattern. And we have negative divergence that's in play. So across the board, I see negative technical setups in the FANG stocks. We just don't have sell signals. And that's really it. So again, thank you. If you guys want to learn how to use technical analysis and kind of learn some of these skills and abilities, take my trading course. My training course, basically, the link is in the description below. It's a $99 course. I think it's about 5 or 6 hours long of training. I'll help teach you what I know basically in this area. And leave me a thumbs up if you guys find value in the content. Catch you guys on the next one.